Another week, another record, actually two. Just a sign of the times, my friends. It is unambiguous at this point. We are in the midst of a rip-roaring bull market in the metals. Hello and welcome to the Northern Miner Podcast. My name's Adrian Pocobelli. A white-hot silver market, a red-hot copper market. Here is the headline. Bloomberg News via mining.com. Silver price heads for weekly gain in speculative surge. Now let's listen to the reasons that are being given here. Silver jumped in a fourth day as exchange-traded fund inflows, momentum following, and physical market tightness pushed the white metal towards its best year since 1979. You heard that right. Silver is having its best year since 1979. The precious metal rose to an all-time high above $64 an ounce on Friday morning, with prices fluctuating wildly. And you do the math for those Canadians and Australians out there, you do the conversion. It starts to get even more exciting for those investors who have participated. Silver has gained about 10% this week, bolstered by dovish signals from the Federal Reserve, which made an unexpected rate cut and pointed to signs of weakening in the U.S. labor market. I was also hearing talk of quantitative easing. On YouTube, it doesn't say that here. $40 billion is what people were discussing, quite interestingly. Lower rates are a tailwind for non-interest-bearing precious metals like silver. Most analysts said the scale of the advance was difficult to connect to a single driver. Price gains in silver can sometimes spur further upside as retail investors and momentum traders are drawn to the notorious volatile metal. And they have a chart of the year in silver, and what a beautiful chart it is. Silver has surged more than 120% this year, it says. It continues. This week's rally comes just 2 months after the London silver market dipped into a full-blown squeeze as inflows into ETFs and exports to India eroded inventories that were already critically low. London's vaults have seen significant inflows since then, but much of the world's available silver remains in New York as traders wait for the outcome of the U.S.'s Section 232 probe, which could lead to tariffs or trade war restrictions on the metal. Quote, until the lights come on, silver continues to stage an increasingly risky blow-off top, Daniel Galley of TD Securities wrote in a note Thursday. And scrolling down, one indication of speculative fervor was the level of call option buying, both on silver futures and on ETFs, which track the volume of the metal. Call options give the buyer the ability to buy a security at a predetermined price level. They're a cheap way to bet on upside prices. Quote, there has been a lot of fresh bullish interest in options on both the CME future and SLV, said Edward Sternberg, head of metals options at Optiver Holding BV, noting that this appeared to be driving silver prices more than short covering. Quote, since SLV is popular with retail as well as institutional investors, the call buying likely has come from both sides. Steinberg said, there has been a surprising lack of interest in puts despite the big rally. So it's been a long time coming. Silver bulls have been waiting years, more than a decade, as long as I've been paying attention, for the real big bull market to come to life in silver. So interesting developments there. Also copper having a big week. This is Reuters via mining.com. How tight supply, AI demand propelled copper prices towards $12,000. Copper is closing in on the $12,000 a metric ton mark as expectations of soaring demand from data centers that power artificial intelligence and tight supplies collide with shortages outside the United States. Valued for its exceptional electrical conductivity, copper wiring is vital in power grids that feed data centers, electric vehicles, and the infrastructure needed for the energy transition. Copper prices are up 35% so far this year and heading for their largest gain since 2009, due to mining disruptions and stockpiling in the U.S. On Friday, they touched $11,952 a ton. And we have a quote from benchmark mineral intelligence analyst Dan DeYoung. Quote, investors who want a broad basket of AI interests will also buy into financial products which include hard assets that feed into data centers. Investors will buy copper-related assets such as ETFs. Scrolling down, a recent Reuters survey of analysts' forecasts shows the copper market will see a deficit of 124,000 tons this year and 150,000 tons next year. Copper demand growth is being driven by billions of dollars being invested worldwide to modernize and expand power grids. Data centers and clean energy require vast amounts of electricity. The energy transition, which includes renewable energy technology such as wind and solar, is also expected to boost copper demand. Quote, bullish sentiment is being driven by the narrative around tight supply supported by macro news flows, said Macquarie analyst Alice Fox. So a new record in copper. We also had a story by a staff writer on mining.com. Copper price shoots to new record on U.S. economic outlook. So reasons are being given. We can debate the reasons, but the one thing we do know for sure is the price of these metals is going up. Copper shot up to a new all-time high on Thursday as an improved growth forecast for the U.S. economy gave further boost to the metals rally. 3-month futures on the London Metal Exchange advanced as much as 2.1% to $11,800 a ton, surpassing a record set on Monday. So interesting developments in both the silver and copper market. Turning to rare earths, the licenses are starting to be granted. The rare earths are starting to flow. Here's a story from Reuters.com. Ford suppliers receive China's new streamlined rare earth licenses. So the licenses are flowing. Let's see what it says here. This is December 10th. Chinese rare earth magnet suppliers to U.S. automaker Ford Motor were included in the first batch of new export licenses issued by Beijing to boost shipments and reduce shortages of the vital components, the carmaker said on Wednesday. The so-called general licenses were agreed after President Xi Jinping and Donald Trump met in South Korea and will reportedly allow larger shipments with fewer hurdles under year-long permits for individual customers. And scrolling down, Reuters reported last week that 3 Chinese magnet suppliers had licenses issued, but Ford appears to be the first foreign customer to acknowledge that suppliers have received approvals under the streamlined system. We also have a headline December 15th from Bloomberg.com. China starts granting general licenses for rare earths, EU says. And this is by Jorge Valero, Oliver Crook, and Andrea Paliciano. China has started granting licenses with lengthier terms to allow European companies to obtain critical minerals essential for industries including clean tech, automakers, and defense contractors, the EU's top trade officials said. And we have a quote from Maros Sefcovic, European Commission's trade chief, who told Bloomberg Television, quote, we are getting initial reports from our industry that they are getting these general licenses, but we need to have a little bit more granular information to evaluate the whole process. It's quite interesting. It appears to me that this is all being slow-walked a little bit. How long has it taken? 3 weeks to get the licenses. And how long will it be till the rare earths show up? Will it be mid-January? So it'll be interesting to hear when the rare earths actually begin arriving. The licenses are there. Now, on the heavy rare earth front, which is the real bottleneck as we've discussed, and which for the most part is basically 100% controlled by China. And of course, we've been following Myanmar for over a year because they are one of the biggest sources of heavy rare earths for the Chinese. Now, there is a civil war in Myanmar, and we've been getting stories in the last few weeks that India has been making a deal with the Kia, which are the rebels that have taken over some of the rare earth mining facilities. It's described as a hub, oftentimes, of several areas where these rare earths are mined and separated. We're getting reports that India is signing a deal with the Kia, the rebels in Myanmar, on these heavy rare earths and creating a road. Now, these allegations are being denied by the Indian embassy in Myanmar. But here is the story. So first we have the Ukhrul Times. India Kia signed secret deal on rare earth mining in Myanmar. This is December 14th, so Sunday. India and the Kachin Independence Army, or Kia, a rebel group in Myanmar, have allegedly signed a secret agreement regarding the extraction of rare earth minerals in Myanmar, according to reports. As per a report by the Silicon Valley Times, this agreement systematically undermines Myanmar's sovereignty and constitutes a strategic partnership to mine rare earth minerals in Myanmar. Satellite imagery and cross-border intelligence have confirmed that India is constructing a 365-kilometer-long road from India to the rare earth mining site of Chipwi Township, Kachin State, Myanmar. Reportedly, this road is being built without the approval of the Myanmar military or the junta, who are allied with China, and would give India access to Myanmar's rare earth minerals, while the Kia would receive arms, ammunition, and weapons, medicine, and other logistical support. According to the report, the partnership agreement allegedly also includes a secret plan to build a second strategic road extending from the Kia headquarters in Lecce through Sagaing region to reach Rikaudar town in Chin State. So quite hot allegations here, and of course, we have another story from the Impal Times, and it says here, India-Kia rare earth deal allegations denied by embassy. Reports claiming that India has signed a secret agreement with the Kachin Independence Army, or Kia, for rare earth mining in Myanmar have sparked controversy, but the Indian embassy in Myanmar has dismissed the claims as, quote, fabricated disinformation. According to reports, India is allegedly constructing a 365-kilometer road from India to Kachin State to access minerals, while the Kia would receive arms, medicines, and logistical support. Analysts also cited a possible second corridor. So just as we were reading, Myanmar officials condemned the alleged deal, calling it a violation of international law and warning that unauthorized activities could provoke military action. The Indian embassy, however, rejected the reports, stating such claims aim to damage bilateral relations and noting that projects like the Caledon and tripartite road corridors are still under development. The controversy highlights sensitivities surrounding border regions and resource access, even as both governments maintain that existing development projects remain the focus of cross-border cooperation. So interesting allegations that are going on in Myanmar, which I call the tip of the spear of this whole rare earths debate. Meanwhile, in the critical mineral rare earth front, we have an exclusive from the Wall Street Journal. Trove of critical minerals uncovered in the Utah desert, and this came out December 11th. Mineral production company Ionic says it discovered 16 different rare earth and critical minerals that will help the U.S. compete with China. And this is by Clara Hudson at the Wall Street Journal. Ionic Mineral Technologies was mining the clay in Utah when it chanced upon what could be the critical mineral equivalent of a gold mine. Ionic MT has leased the land as part of its business producing nanosilicon for lithium-ion batteries, which are used in electric vehicles. But the company told Wall Street Journal Pro-Sustainable Business that what it found was a host of other minerals, in what it says may be the most significant critical mineral reserve in the United States. Ionic MT said it discovered high grades of 16 different types of minerals, everything from lithium to alumina, germanium, rubidium, cesium, vanadium, and niobium at the site in Utah's Silicon Ridge. So, interesting development there. And continuing on, yttrium being another rare earth in short supply, we have an update there. This is Reuters via mining.com. GE Vernova working with U.S. government to boost stocks of yttrium. Gas turbine maker GE Vernova is working with the U.S. government to increase its stockpiles of the rare earth yttrium, CEO Stock Strazik said on Tuesday, as China's export controls of the vital element create shortages across energy, aerospace, and semiconductors. GE Vernova, one of only 3 major makers of gas turbines globally, has yttrium inventories to last the rest of 2025 and into next year, Strazik said. I mean, that could be 2 months. Although he did not disclose how long into next year supplies would last. The company is also investing in alternatives to replace certain rare earths used in production if it becomes necessary, although there were costs or performance trade-offs in some cases, he added. Quote, "We are very focused on it every day," Strazik said in response to a question about yttrium shortages at an investor day on Tuesday. Quote, "We're in good shape for the foreseeable future based on the fact that we have everything we need for this year into next year. But we will continue to be opportunistic whenever there's an opportunity to add to the inventory," he added. So also on the military front, U.S. military developing small refineries for critical minerals. This is Ernest Shader at Reuters.com, and this came out December 9th. The U.S. military said it plans to develop a fleet of small-scale refineries to produce critical minerals used to make bullets, armor, and other types of weaponry, a move aimed at developing domestic sources for niche materials that Chinese miners have long controlled. So, just to repeat, the U.S. military is now developing a fleet of small-scale refineries, according to Reuters. The plans, which have not been previously reported, are being developed by the U.S. Army alongside the Idaho National Laboratory, or INL, and antimony and gold miner Perpetua Resources, with antimony being the first mineral the military aims to refine. While the Army said it did not plan to produce large volumes of minerals for private use, the small-scale approach would allow access to a steady stream of these building blocks without relying on commercial refineries, which are often far larger and focused on bulk products, including copper and iron ore. If successful, Washington aims to develop refineries for other minerals as well, including tungsten, rare earths, and boron, all of which are considered critical by the U.S. government. Quote, "We need to come up with a way to make our own critical minerals domestically that we can actually monitor and control within our borders," said Mark Metzger, a munitions procurement advisor for the U.S. Army. For antimony, the Army spent $30 million developing the refinery program over several years, with privately held Westpro Machinery designing a refinery that can be transported in 4 shipping containers. The refinery can produce 7 to 10 metric tons annually of a type of antimony known as trisulfide, far less than a commercial refiner would produce, but enough to supply the Army during peacetime. Should a conflict break out, the Army can expand processing by adding additional mini refineries to process ore from Perpetua's Idaho mine, Metzger said. The Army is in talks with other U.S. antimony projects for additional sourcing, he added. Antimony trisulfide is used to make primers, the explosive cap at a bullet's base. This version of antimony has not been produced in the United States since the 1960s. So historic times here in the metals markets, and finally, an update on Anglo-American and Teck, courtesy of the Financial Times. Anglo-American and Teck shareholders vote in favor of $50 billion merger, and that is by Camilla Hodgson and Ilya Gridnev. Shareholders in Anglo-American and Canada's Teck Resources have voted overwhelmingly in favor of a planned $50 billion merger of the two companies. London-listed Anglo shareholders voted 99% in favor of the largest mining deal of the year in a meeting on Tuesday. A short time later in Vancouver, more than 99% of the votes cast by Teck's Class A common shareholders backed the deal, while 90% of votes by its Class B shareholders approved it. So that looks like it is going through. Duncan Wanblad, chief executive of Anglo-American, said, quote, "We are delighted with the clear endorsement from our shareholders to take this next strategic step to unlock outstanding value at Anglo-Teck." Teck's president and chief executive Jonathan Price said Anglo-Teck would, quote, "deliver long-term value through a world-class copper growth portfolio." So more history being written here on a daily basis, and we cover it here. So a wonderful show ahead of you. We have the Ontario Mining Panel from the International Mining Symposium, featuring Ontario Energy and Mines Minister Stephen Lecce, Ross Beaty, and Canada Nickel's Mark Selby. It is a cutting-edge discussion, as you're going to hear here, on how policymakers are thinking, and really the Copernican revolution that has gone on in the approach to mining. You will hear Ross Beaty simply be in amazement at the initiative being taken by Ontario's provincial government, with Stephen Lecce as its representative on the panel. And the panel is moderated by Northern Miner Editor-in-Chief Colin McClelland. It was a newsmaking discussion, so I hope you enjoy that. I am very pleased to present it to you on today's show. Also, coming up this episode, we have Southern Cross Gold President and CEO Michael Hudson, who discusses the Smoky Creek Gold Antimony Project in Australia and the exciting developments they have going on at the company. If you want to find us online, you can find us at northernminer.com. You can find us on X at Northern Miner. You can find us on Instagram at The Northern Miner, and on Facebook, LinkedIn, and YouTube, where we also host these podcasts, and wherever podcasts are available, including Spotify, SoundCloud, and Apple Podcasts. And with that, let's turn to Michael Hudson, President and CEO of Southern Cross Gold, for this week's Spotlight. Joining us today, I'm very pleased to welcome to the Northern Miner podcast for this week's Spotlight, Michael Hudson, President and CEO of Southern Cross Gold. Michael, welcome to the show.
Thank you very much, Adrian. Pleasure to be here.
It's great to have you, Michael. It's always interesting for me hearing from companies that have projects in Australia. I kind of see it as like a mining cousin of sorts to Canada in its own way. And so for those that are unfamiliar with Southern Cross Gold, what is going on at Southern Cross? Could you give us a little bit of background on the company?
Sure. We trade on both the TSX as SXGC and on the ASX as SX2. So we're a dual listed company. The project is down here in Victoria, Australia. It's called Sunday Creek. It's a gold antimony project. It's in the shadow of the headframe of what made Victoria famous in the last 7 or 8 years, Fosterville. So we found another one of those systems. We're drilling with 10 rigs today, going to 22 rigs, doing lots of things that I'm sure we'll unpack. We're building a multi-million ounce 10-gram system. They're very rare, and we've got a lovely mix of 80% gold and 20% antimony, which makes it a very critical project as well. So a lot happening, a very exciting gold project, great shareholders, Pierre Lasson, Darren Morcombe, Kirill Sokolov, plus about 25% institutions. So it's about 50 or 60% held by those groups who know how to build these projects as well. So perfect project, perfect shareholders in what now is a pretty good market.
Indeed it is. And if Pierre Lasson is investing, of course, that will turn some heads in the mining world. Now, Sunday Creek is the flagship. So this is in the Victoria district. How long have you had this project? And basically, where are you on this project?
So we acquired the project. It was a series of old mines with only about 5,000 metres of drilling during the start of COVID during 2020. And the deepest hole on the project was an old mine shaft at 180 metres. Since then, and really it was about 3 years ago that we really made the discovery hole. We put over 100 kilometres of drilling into the project, and we got 200 kilometres planned. We've just been permitted to put a decline or a tunnel into the project. We've got something like 70 odd people working in and around the project, from mining engineers now and metallurgists and lots of geologists, as you can imagine. And we're building a project here to mine it, basically, and from the first discovery hole. And there's a lot of things happening to make that happen.
Okay, excellent. And you mentioned the geologists. Could you tell us a little bit about the team and who is all working on this at Southern Cross Gold?
Sunday Creek is a unique project. It's about 60 kilometres from Melbourne. So I'm a geologist and spent my career in lots of different places on Earth, had lots of fun, but nobody's ever told me that I could be home every night with my family and send my kids to a good school and never miss a birthday. Being that close to a capital city is a unique proposition, and that makes Sunday Creek unique as a project. So we've attracted a lot of very good people to the project. We have as COO Ryan Osterberry, who's just come out of Mandalay/Alkane. He built and ran Costerfield, which is a analogous project mine, the largest antimony producer in the Western world, just about 60 kilometres from us. So we've got that skill base. We've got a very good CFO now who was trained through Evolution and Newcrest, Michael Frame. We've got Kenny Bush, who's come out of Fosterville and Costerfield. We've got Lisa Gibbons, who's the head of our community and external relations, and she's very well trained Newmont geologist, and a team that is certainly well beyond that mix as well. We've got a chief of staff. Even this company is going to double in size in terms of the staff over the next year as we bring lots more rigs to the table and develop underground. So an amazing team that will only get better. And these things are all around the team, right? Everyone says a good project can be stuffed by the wrong people, and I'm a firm believer of that. So putting a lot of effort into getting the best people around us.
It sounds quite promising, Michael. So how do you see this playing out then? You mentioned you're going to bring more rigs in. Where do you go from here with this project?
So we have a very articulated strategy and plan that we've enunciated to the market. We have about 150 million in the bank, so we're fully funded for what I'm just going to outline. We've got 200 kilometres of drilling to put into the project between now and Q1 27, and that will drill out a substantial resource and take us into a PEA Q1 27. We're putting a decline in. We've just been permitted. The Premier of the state of Victoria just announced that a week or so ago as part of a key economic platform of critical minerals. Is part of the Premier's desire to have the mining of critical minerals as a key economic platform. And so we've got a government who is being very supportive. They permitted 4 other mines in the last 8 months in the state. So it's a government that wants regional development and responsible development and lots of jobs regionally. So $60 million is the drill out, $30 million is the decline. And we're not forgetting our regional exploration. We're only about 1/10 of the way through the discovery here. And we've drilled something out for over about 1.2 kilometres down to a kilometre. But another 90% of the trend of old mines exists still to be explored, essentially. We've done a lot of the earlier work to define drill targets. So we've got $20 million plan for regional exploration. So about a quarter of the budget for that. And, then there's a lot of different things we can do around the project beyond that, but that's the stated aim to take us through to Q1 27.
Okay, excellent. And in terms of the region, then, it sounds like the infrastructure, if you can go home from work and be at home, sounds like there's pretty good infrastructure from what I gather. And do you have all the permits that you need? Where are you on that front?
Yeah, so we own 3,500 acres of freehold land. So we bought 10 farms over the project and kilometres south of the project, and we're buffering the project to the north by buying more properties as we speak. So owning the freehold allows us to operate on our own land, not just the mineral tenure, but we own the freehold land on top of the project. And that creates a lot of flexibility for us. We're fully permitted to drill as we are, and we're certainly permitted to go underground now with a decline or a tunnel, which will take us up to Q1 27. We're not permitted to mine the project today, but that's not the stated aim today. But like I said in the intro, we are building this project to mine it, and our shareholders are very aligned. They want to be fully exposed to not what will be the biggest mine in the industry, but it will be one of the highest margin projects because we're looking at plus 10 gram dirt here, and we've stated that in some exploration targets. We put around about 80 kilometres of the drilling we put out there in the public domain, 2.2 to 3.2 million ounces at between 8.3 and 10.6 grams gold equivalent. So that's the range we were looking at last March, and we've done a lot of drilling since then.
And so as we wrap up here, Michael, what is your message to investors? What do you want them to know about Southern Cross?
There's still so much more. It's been a great discovery and a great run. It's a $2 billion market cap company, but it really is at the very early stages. We have some of the best shareholders that I've talked to on any metric. The drill hits on 100 gram meter hits divided by the amount of drilling. There's nothing better on earth in terms of the hit rate that we've obtained there. We're working towards our maiden resource and first economic studies. We've got a government that is wanting to permit projects in the state, and I've talked to that. So a perfect discovery with the greatest shareholders in a jurisdiction that wants mining and has had some of the best mines on earth around us. Of course, in the last 10 years, Fosterville was a great peer. And as I said, we found the next one and we're well on the way and fully funded. So come and join us on the ride. It's going to be an exciting next year or two.
Okay, excellent. And this is available on the TSX. It's SXGC, the ASX, SX2. Michael Hudson, President and CEO of Southern Cross Gold. Thank you for joining us and telling us all about what you're working on at the company.
Thank you, Adrian.
Thank you once again to Southern Cross Gold for sponsoring this week's episode of the Northern Miner Podcast. If you want to learn more, visit southerncrossgold.com. So, the U.S. put out its national security document in November. It's called the National Security Strategy of the United States of America, and that was released in early November 2025. And it's been described as a kind of new version of the Monroe Doctrine, where the United States wants to, in a sense, secure as much as possible the critical minerals in the Western Hemisphere for itself. Interestingly, following that, we have two big headlines from Chinese companies that are buying up major properties in South America. Equinox sells Brazilian operations to CMOC for over $1 billion. This is by a staff writer at mining.com. Equinox Gold has sold its Brazilian operations to China's CMOC group in a deal worth over $1 billion, the Canadian gold miner announced in a press release on Sunday. The assets included in the sale are Equinox's 100% interest in the Orizona mine in Morinhao, the RDM mine in Minas Gerais, and the Bahia complex consisting of the Fazenda and Santa Luz mines. Together, they are expected to deliver 250,000 to 270,000 ounces of gold production this year, according to company guidance. The total consideration comprises an upfront cash payment of $900 million due on closing, plus a contingent cash payment of up to $115 million linked to the mine's production, due 1 year after closing. The asset sale, says Equinox CEO Darren Hall, is a pivotal step that positions the company as a pure North American-focused gold producer, quote, underpinned by robust cash flow and a Tier 1 growth profile. So a gold mine being sold to CMOC Group, And also, SolGold weighs higher $1.1 billion Zhangji bid as copper M&A heats up. This is by Cecilia Jamasmi at mining.com. Ecuador-focused miner SolGold has opened the door to a takeover from China's Zhangji Copper, which returned with a higher all-cash proposal valuing the company at $1.13 billion. JCC, already SolGold's largest shareholder with 12.2%, first approached the company on November 23rd with a non-binding proposal that was rejected. On November 28th, it came back with a 26 pence per share offer that the board also rebuffed. The latest 28 pence bid marks JCC's third attempt and lifts the price by 7.7%. SolGold said it would recommend shareholders accept the fresh bid if JCC tables it as a firm offer on those terms. A successful acquisition would hand JCC full control of SolGold's flagship Cascabel copper-gold project in northern Ecuador, one of South America's largest undeveloped copper-gold resources. So all of this is being sold for a mere $1.1 billion. The new bid comes as copper assets attract intense interest on expectations of a looming supply crunch driven by electrification. The heightened demand has sparked major deal-making attempts, including BHP's unsuccessful runs at Anglo American. Turning to the smelter front and mining processing, we have a big development with another story we've been following for over a year, and that is Korea Zinc. JP Morgan backs Korea Zinc's $7.4 billion Tennessee smelter. This is Bloomberg News via mining.com. JP Morgan Chase and the U.S. government are backing Korea Zinc's planned $7.4 billion smelter in Tennessee that will supply critical minerals essential for chipmaking, defense, and aerospace. Korea Zinc, one of the world's largest processors of the metal, said Monday it will establish a foreign joint venture called Crucible JV to oversee the project. The venture will be comprised of Korea Zinc, the U.S. government, and other unnamed investors, the company said. Scrolling down, in a social media post on X, Commerce Secretary Howard Lutnick hailed the Korea Zinc agreement as, quote, a big win for America, adding that the U.S. will have priority access to the company's global production in 2026. Quote, this is exactly how we win. Build here, secure our supply chains, create great jobs, and keep America the world's industrial and technological leader, Lutnick wrote. The facility will produce a range of minerals including zinc, lead, copper, gold, silver, antimony, germanium, and gallium. Continuing on, Australia unveils rescue bid for Rio Tinto's Tomago aluminum smelter. This is Reuters via mining.com. Prime Minister Anthony Albanese announced on Friday a rescue effort to keep open Australia's largest aluminum smelter after its current power contract expires in 2028. The news comes after the company warned in October that Tomago Aluminum, employer of more than 1,000 full-time staff and 200 contractors, might be forced to shut down after failing to secure new affordable energy supplies. Aluminum was increasingly a vital product, Albanese said, making it important to keep Tomago open. Quote, if Australia doesn't produce aluminum, then the knock-on effect in other industries is significant, he said at the smelter located north of Sydney in the state of New South Wales. Quote, we are working with the New South Wales government to make sure there are long-term energy solutions to go forward beyond 2028. Continuing on, Barrick regains Mali mine along with 3 tons of its gold. And this follows a headline from Reuters on December 12th. Mali returns possession of seized gold to Barrick. So this is quite the turnaround story here of Barrick in Mali, and this is Bloomberg News via mining.com. Mali has restored control of the Loulo-Gounkoto mine to Barrick Mining and will return 3 tons of gold to the company after the two sides resolved a years-long dispute last month. The restitution has already been ordered, with the return of the gold and the handover of the mine set to follow the formal conclusion of legal proceedings, the company's legal representatives said. Gold confiscated earlier this year when operations at the mine were suspended is expected to be returned as a procedural formality. Mali's mining ministry declined to comment on the matter. Scrolling down, under the deal, Barrick agreed to pay a $437 million settlement, regain operational control of the Loulo-Gounkoto complex, and withdraw its arbitration claims against Mali. In return, the government will drop its charges against the company. 4 Barrick employees detained during the dispute were released last month. So good news out of Mali for Barrick. Continuing on, LME outlines proposed new rules on position limits. The London Metal Exchange on Monday outlined plans for new rules on position limits from July next year to comply with a directive from Britain's financial regulator. The Financial Conduct Authority currently sets and administers position limits in commodity derivatives to prevent market manipulation and abuse. But responsibility for this will pass to the trading venues themselves from July 6, 2026. Quote, this will strengthen the LME's ability to calibrate and manage limits directly, ensuring they remain appropriate and responsive to market dynamics, the LME, the world's primary metals marketplace, said in a statement. The new rules will apply to critical contracts in the Bourse's core aluminum, copper, lead, nickel, tin, and zinc futures offerings, as well as related contracts, including options and trade at settlement contracts, the statement said. And final story, Indonesia's tin exports surge as supply concerns dissipate. And this is Bloomberg News via mining.com. Indonesia's exports of tin recovered in November in a sign that concerns are easing over supply disruptions caused by the country's crackdown on illegal mining. Shipments from the world's second largest producer almost tripled to 7,459 tons on a monthly basis and were valued at $268 million, according to Trade Ministry data. Exports had slumped to 2,643 tons in October, the lowest since January after President Prabowo Subianto instructed authorities to move against illegal mines in the top-producing region of Bangka Belitung. The campaign has underpinned tin's rally this year, which surged 41% as the best-performing contract on the London Metal Exchange. So interesting developments in the tin market. So we'll see what the price is in metal prices. Those are your news stories. Now, let's take a look at metal prices. And turning to metal prices, let's take a quick look at the bond market for context. The U.S. 10-year bond is yielding 4.17%. That is unchanged from last week. The UK 10-year gilt is yielding 4.51%. That is down 0.02% on the week. Italy's 10-year bond is yielding 3.52%. That is down 0.05% on the week. France's 10-year bond is yielding 3.55%. That is down 0.04% on the week. Germany's 10-year Bund is yielding 2.84%. That is down 0.02% on the week. Japan's 10-year bond is yielding 1.95%. That is down 0.01% on the week and staying at elevated levels. And China's 10-year bond is yielding 1.85%. And that is down 0.01% on the week. So yields coming down. Turning to precious metals, gold is trading at $4,312.60 per ounce. That is $105 higher on the week. Silver is trading at $63.17 per ounce. That is $5 higher on the week. Platinum is trading at $1,807.20 per ounce. That is $143 higher than last week, and palladium is trading at $1,591 even. That is $115 higher than last week. So precious metals rocket higher. Turning to industrial metals, copper is trading at $5.34 per pound. That is down 2 cents on the week. Iron ore is trading at $106.05 per metric ton. That is down 37 cents on the week. So edging slightly lower. Aluminum is also lower at $1.30 per pound. That is a penny lower on the week. Lead is also lower at 88 cents per pound. That is 3 cents lower on the week. A real big standout is nickel, trading at $6.48 per pound. That is down 28 cents on the week. Is it a bottom in nickel? We shall see. And how low will it go? Tin is trading at $18.75 per pound. That is 58 cents higher than last week. Cobalt is also higher at $23.95 per pound. That is 60 cents higher on the week. Lithium is also higher at $13.50 per kilogram. That is 38 cents higher on the week. And uranium is also higher at $77.90 per pound. That is $1.35 higher on the week. And zinc is lower at $1.40 per pound. That is 2 cents lower on the week. Zooming out, precious metals decisively higher and a big new record in silver. And industrial metals, a mixed bag with nickel standing out on the downside. And those are your metal prices. Coming up, I'm very pleased to present the Ontario Provincial Panel, Unlocking Ontario, One Project, One Process at the International Mining Symposium, hosted by the Northern Miner in London. And it featured Ontario Minister of Energy and Mines, Stephen Lecce, Mark Selby of Canada Nickel, as well as Hall of Famer Ross Beaty, filling in for Rob McEwen, who was feeling a little under the weather in the morning and luckily made it later in the day. It is moderated by Northern Miner Editor-in-Chief Colin McClelland. I hope you enjoy it, and I will see you on the other side.
We have Minister Lecce here. It's a great honor. Thanks you very much for attending and a great speech on covering a lot of the points we're going to go over. And I'd like to call up Mark Selby, CEO of Canada Nickel, and Ross Beaty. So good morning, Minister. I guess we'll just move on from some of the things you were saying about the One Project, One Process program. You've picked one project so far. That's the PAC lithium project in the far north with Frontier Lithium.
Right.
What were some of the attributes there that stood out and why you chose that?
I think what was unique about that project, although there are other notable projects, that matter to the country and province and to the supply chain, but what is unique about that, and what perhaps serves as an inspiration why it made sense to get to yes on this, it includes a large mine. It includes a mill and downstream conversion. It really is the full ecosystem of production in the province. One of the things that Ontario is determined to end is this propensity of the ripping and shipping of our raw materials to other industrialized economies, only for them to get the value-added jobs. So the fact is the province sort of said, we're going to stop complaining about the problem. We're going to put capital to catalyze and to incentivize private investment to stay in Ontario. And this is a great project because, of course, lithium, I talk about supply chains. I speak about my former federal orientation when I worked for the former Prime Minister Stephen Harper. But look, it's binary. It's either we step it up as Canadians or the Chinese will dominate and prevail. And if you care about human rights, if you care about ethical resources, labor standards, the environment, then you will strongly join the campaign to promote Canada's resources to the world. And lithium is an important resource that is right now fundamentally controlled by that regime. So it is good for Canada to have this type of investment in the province, and we're grateful for their participation. And it also underpins why we would have nominated Canada Nickel, another case study for the need to promote good resources and good.
And I'll let Mark kind of explain that. You've been designated or nominated to the Major Projects Office. Now that's on the federal level, higher up and from Ontario, but what does that mean for your project going forward now, and how maybe is that altering your timelines? What are you looking forward in your next steps towards production?
Yeah, so the Crawford Nickel Project is the second largest nickel reserve in the world. We'd be, to Minister Lecce's point, we would be the Western world's largest nickel sulfide operation if we're operating today, and we are going to build that next stage processing in Timmins to make sure we don't rip and ship. I love that term. I'm going to use that going forward. To add that value in Ontario and in Canada. In terms of the nomination to the Major Projects Office, it was, a great recognition for our project. We were put forward by the province, so thank you for that. But where we'll really get some help is really on twofold. One, in terms of financing, and the second, in terms of permitting. So the goal for us right now is we want to break ground by Christmas time next year.
Okay.
Hit that winter window in the Abitibi where you need to get production going. And so working with the Major Projects Office, Dawn Farrell and her team are great. They are get it done kind of people. This is the talking is stopping and the work is going to get going. And so they'll work with us in terms of there's various financing envelopes within the federal government. And so they'll work with us to make sure that, we get through each of those funding envelopes relatively quickly. In terms of permitting, we're well down the path. We expect our main federal permit by the second quarter next year, and we're diving into the permitting process with Ontario. So hopefully the 1P comes soon. And so again, having that sort of clear concierge sort of one person service is going to be a huge help to the project.
That's fantastic, Mark. Ross, I want to bring you in if you can. Just kind of maybe explain. You've gone through Greenstone and you've opened Valentine and Newfoundland. Maybe a comparison to getting things done in the past, permitting, and maybe what it looks like under this new program in Ontario.
Sure. We actually do have a big mine in Ontario. I have to say, Minister Lecce, I heard your remarks, and a couple of companies that I founded, being Pan American Silver and Equinox Gold, together today we operate 18 mines in 11 countries. So we've been pretty active in different jurisdictions, and I have all through my career. But I've never, ever, ever heard a politician make such supportive comments as you made this morning about mining, and I just want to thank you. It's such a breath of fresh air. We're used to, battling regulators and battling permitters and battling all kinds of people in all kinds of places. And it's just so refreshing to hear this breath of fresh air from the Minister of Energy and Mines in Ontario. And as you said, they're going to be walking the talk. They're actually going to be doing this stuff. So we're not building a mine in Ontario now. We're operating one that we just finished construction of a year ago. And it was a big, big mine. It's going to be a long life mine in a great province we're proud to be in. Ontario, I have no big complaints about working in Ontario at all right now. I kind of wish I was developing a new mine there, quite frankly.
You should.
Maybe we will.
Come on.
We could use a new strategic investor if you'd like.
So, I just make those comments.
That's great. Well, Mark, maybe you want to pick up on that. You're looking for maybe some partnerships. You've got a $3.5 billion CapEx to meet. How are you going to structure that, and what's looking like there?
Yeah, so the first phase is $2 billion US. We've got a number of cornerstone shareholders with Agnico Eagle, Anglo American. Samsung SDI is one of the world's largest battery producers. And if they make the investment at the project level, then they get 30% of the offtake. The great thing is right now, and again, for investors in the room, there's a whole series of government funding programs at the federal level, the provincial level. The federal refundable tax credit program, for us, we qualify for the critical minerals credit, which gives us 30 cents on the dollar for every dollar we invest. Because our rocks can soak up carbon, and we developed a process where we inject up to 1.5 million tons of CO2 per year, which would make us one of Canada's largest carbon storage facilities. We qualify for a program that gives us 50 cents on the dollar. Those combined is over $600 million US. So in a $2 billion project, which is a $2.5 billion funding package, $1.5 billion of that is debt. And we've already got Export Development Canada and one of the other big agencies on board for more than $1 billion in capital. And that $1 billion equity check, those two refundable tax credits on their own are over $600 million US. With 100 from Samsung, we're basically looking to solve $300 million. And so, not only from the existing government envelopes at the federal and the provincial level, the Mineral Processing Fund is an exciting opportunity. But one of the other things the Major Projects Office is going to do is actually go outbound to the various sovereign wealth funds globally. So Prime Minister Carney was in Dubai a couple weeks ago. I happened to be there at a conference just the week after. And again, I can tell you, they're excited about the opportunity to deploy capital. And at the end of the day, $1 billion in project in that area is just sort of, entry level. So, the fact that the Major Projects Office can effectively package a set of investment opportunities, I think is very exciting. So again, I think you're going to see a lot more outbound investment from other parts of the world that'll help us get done what we need to get done.
Minister Lecce, do you want to kind of comment in there about some of the programs, maybe in the hydroelectric, that fit in nicely with Mark's project?
Yeah, well, I think just germane on the mining side, I think what is exciting is that we've been working with the Federal Minister, Tim Hodgson, on offtake agreements within the G7. Right. So really looking to find ways to move these commodities into nations and industrial applications where they have credible, dependable access and security of supply. That's the first principle that is really important. But on power, this is the beauty of the synergization of energy and mines, is that we have one ministry that is functioning, really trying to make it easier to invest. And one of the challenges I think many of you will have is access to reliable power and clean power. And so we've launched net new hydroelectric power for the first time in a decade in Northern Ontario. It's led by Indigenous nations. A great success story, a win-win for everyone. We need more clean power. We've also building a transmission line into Greenstone, a transmission line into Red Lake that I authorized just a few weeks ago, $1 billion line that's going to unlock almost a 10 times cap investment for the region. We're building new lines into Sudbury, new lines as well into the Ring of Fire. And so my point to you is like north, south, east, and west, we are building big. I just authorized in what is called Ontario's Integrated Energy Plan. Is it the first time you, as investors, have a 25-year energy roadmap where we know the megawatts we're going to generate, the transmission capacity, the sources of energy, and of course, that includes net new transmission. So within that program, we've authorized 1,500 kilometers of net new lines so that we move power to the regions to help enable both the improvement of quality of life, because many of these communities still depend on diesel, and I think many of us would accept that is, unacceptable. We have to strive for better for the local Indigenous peoples. But it's also going to help enable economic development, which is good for all. So this is the win-win we seek in the province, and I will give the Premier, this is part of his vision. It's the full investment, the full unlocking of government resources, and I think it's really, right now, this year particularly, I feel like there's momentum brewing behind us.
Ross, you have a reputation as a forward thinker when it comes to energy and the greening of mining. I was wondering if you could explain how that's entered your thought process over time.
Well, I repeat this. Minister Lecce's comments are just music to my ears. He's very enlightened on what will be the mining industry of the future. It will be an industry with greater innovation. It could be carbon storage, that kind of thing. It could be different electrical machines underground and at surface rather than diesel. It's going to be a different industry, and it's going to be a better one, a cleaner one, and we're very happy to be part of that as well. Clean energy is a big part of it. And so, I was sort of listening to everything you said, and I was going, yeah, that's cool. Yeah, that's good. That's good. Tick. It's all good. It's really how I think about the future of mining. Something that, is not a dirty industry, but it's an industry that has a much better reputation for doing things right. And as you said in your remarks, I will parrot them. Canada is a world leader in doing this. And to the extent we can stay at the front edge of innovation, we are going to continue to be a world leader in this industry. I've just spent the last few days in Poland, which is an industry. It has one mine, one big copper mine. It was built in the 1950s, and it is in dire need of kind of upgrading into modern methods. We are developing a project there, which we are hoping to use, this modern innovation. But it's going to take a lot of time to get that society to understand what it means. And a big direction in, for example, Poland, that we're hoping to do in, say, 5 years, is what we are already doing in Canada. Mm-hmm. And so we are going to be world leaders. I'm a champion of Ontario because we've had a great experience there in the last 5 years. We spent $1.8 billion building a big new mine in northern Ontario at Geraldton, the Greenstone mine. And really, it was a great success. We didn't have any real hitches. We built it on time, on schedule, and it's been a big success. So I'm waving the flag.
Can I just add something on the Polish example, just because I think it's a compelling case study? In Poland, about half of their grid is coal-based. Yeah. So we in Ontario they're purchasing 24 small modular reactors being built in the province. We're building the first in the G7 before the Brits and the Americans, with respect to our hosts. I'm sorry. We're Commonwealth friends. We love you too. But nonetheless, before they and the French and the Americans and the Germans, it is Ontario that is leading the way. And that's very powerful. They're going to have a cleaner grid as a consequence. But just to the psychology of being proud of what we do. In the absence of us all, and I almost think, I'm the new guy in this room, and I accept that. But I think the psychology, we have to reset how we think and how we promote what we do. It is so obviously binary. If we care about, EV production and, the future of lower emission vehicles, for example, or expanding storage fleets, either we or very few nations that have access to those resources really scale with a sense of speed, or we will continue to enable nations like China to dominate in this space. And there's nothing clean or ethical about that reality. And so it is in the national interest for any Canadian who purports to care about those social imperatives. It's like, well, now is the time to get these resources out of the ground. And I think there's a growing consensus. Public opinion on mining has improved. Even in the last 12 months, we're at 80% approval rating in the country. It's much higher in Ontario. In Northern Ontario, it's 85%. There is a social acceptability. We talk about license. There is license to build. I think there are lessons learned, and you perhaps could model the way on how to do it right at the front end with Indigenous nations and being meaningful in the consultation. But assuming we do that right, I just think we've got all the ingredients of success. Listen, the Prime Minister agreeing to the province's recommendation on Canada Nickel, this particular project, is a really powerful success story. And it's the first of many. Our small modular reactors were designated for national status. And I think you're going to see the federal government support us on two other important priorities. Large-scale nuclear, which is important to you all, for uranium, but particularly just for clean power. And the second is ending the duplication on assessments for resource projects or infrastructure linked to resource projects, like, for example, a road into, say, the Ring of Fire. And I think this is it's the time.
Mark, you look like you were itching to get in there earlier. I don't know if we've gone past the topic you're on.
No. I think just to echo the importance of having that clean energy foundation, right? And the skill base that we have in Ontario, what that has allowed, us to do, the pace of innovation in mining is really, really picking up. Caterpillar, Komatsu, we were talking to them, 5 years ago. And even at that point, battery trucks were kind of a long way off, not really any commitment. Well, today they're running test vehicles around the world. Canada Nickel, we were to go behind the screen at Caterpillar's test center. Rio Tinto was first, and Canada Nickel was second. And why did we get that opportunity? We've got a very strong technical team. But the key piece of it is what they're looking for is a new operation where they can implement all the latest technology. So we'll have, we may not have battery electric vehicles the first year or two, but within a little bit of time, they'll be there. We'll be fully autonomous. And so Caterpillar, Komatsu, are really attracted by the opportunity to set up in a great place like Ontario because they know the clean power is there, to be able to demonstrate to the world how this gets done.
Minister, and maybe Ross, one comment. Some of these mines, of course, are in remote areas in Canada's far north. Other companies have some way up there. How viable is a small modular reactor in a remote community? It's kind of dangerous in most people's minds. It seems like really expensive. Can you try to put that in perspective?
Nobody can, Colin. Nobody can, because it's never been tried. The only place small modular reactors have ever been tried are nuclear submarines, nuclear aircraft carriers, and the like. And yeah, they've been tried for 60 years now, I think, 50, 60 years. And they work. They work really, really well. But they've never been tried on land. There's been a lot of research and development on them, and that R&D is advancing to pilot stage, demonstration scale, and the next step, of course, is commercial operation. I don't know why people are so worried about them, or certain people are. I don't really know why. Governments shouldn't be. Communities shouldn't be. They've been around for a long time. Nuclear plants have been around for a long time. It is clean energy. There's a storage issue that has to be resolved, but it's being resolved all over the world where there's nuclear plants. So, it's a great clean energy solution for small communities and mines that are remote. And I really look forward to them developing and lowering the cost of energy versus, say, diesel, excluding the pollution costs of diesel, which are usually unpriced. And so, I don't think anybody can say how they're doing, Colin, because they haven't been developed. It's always been...
What's the forecast, though?
Yeah, the forecast is good.
How small can they go?
I think they're looking at things like 50 megawatt reactors, 50 megawatt, 100 megawatt, 300 megawatt, which is perfect size for small communities, even mid-sized mines, of course, depending on the kind of mine, and how much electricity a mine might need, what its processing style is, if it's underground, is it open pit, can the trucks be electrified, and so on. But I'll tell you, the future really is, we have to decarbonize, absolutely. We have to get off polluting fuels like oil and gas and coal. We absolutely have to. We are going to. It's an imperative. So what's the alternative? It's either renewable energy or it's nuclear to be clean. And, nuclear is base load. Renewable energy needs a combination of, wind power or solar power or hydropower plus batteries. And no matter what it uses metals. It's a very metal consumptive business. But at the end of the day, it's a clean business. Electrifying the world is where we're going. Let's get it going now. And as leaders, why not Ontario?
I want to pivot now, if I could, just to talk a bit about nickel, Mark. And we see a lot of it coming out of Indonesia, and that's affected the market tremendously. You've described Indonesia as the OPEC of nickel. With 60% of global production, its dominance is, reaching untold scales. But now, because they have lower grades, you've made arguments that they're likely to manage output, which could see a price floor in nickel. Do you want to explain your thinking there?
Yes. So Indonesia's been the main story in nickel for the past decade. They've grown from a few percent of global supply to over 2/3 today, and they're on their way to 75% of global supply. As several people talked about, the Chinese, it's basically Chinese managed supply for the most part, and it comes with a massive carbon footprint. You're talking 50 to 80 tons of CO2 per ton of nickel. For the main way, about half of global nickel is now produced. The other way is pressure acid leach, which is done in a few places around the world. Unfortunately, they're dumping, you create more than a ton of tailings for every ton of ore you produce, and about 120 tons of tailings for every ton of nickel. This is reactive tailings. This is not sort of, very neutral tailings, and they're piling them up in monsoon conditions in a highly seismic area. We've already had one massive tailings failure. We're going to have multiple, and there's going to be communities that are wiped out. And so the good thing for the nickel market is that, one, we offer a cleaner, greener alternative by a significant margin with the entire district that we have in Timmins, which now has more nickel than the Sudbury Basin, and we're working on adding more. The key part of it now is Indonesia is now looking to manage supply and is being forced to manage supply. With this massive increase in resources, the grades there are dropping. So just over the last 3 years alone, the grades dropped by 15%. So, and that's for the material that produces half of global supply. So yes, they've dominated supply, but they're at the point where that output is going to be limited, and the world is going to need some alternatives from Indonesia.
So what's your forecast on when that could translate into a price that's sustainable?
Yeah, you're going to see the first move in December, January, February this year. The only other alternative supply comes from the Philippines. They enter their rainy season as we go into the start of the year. So they produce half of their nickel in one quarter. In the third quarter, it drops by half in the fourth quarter and half again in the first quarter. So you're going to see the Indonesians give the market a shove, because right now already, because grades and chemistry of the ore has been dropping, Indonesia imports ore from the Philippines. So, that's the equivalent of Saudi Arabia importing oil from Iran or Iraq. So, that supply isn't unlimited, and I think the Indonesians will take advantage of this window to start to get nickel back up to the $18,000 to $20,000 a ton range.
Can I just add one quick thought? Just on soft power leverage with the U.S. I mean, the Department of Defense and the military applications require the highest grade nickel, for which Ontario has the highest grade nickel deposits and among the largest on Earth. I think intersecting this in the discussions with the United States or with other G7 or NATO allies is going to be very consequential for us as well. I mean, they can't have it both ways. I mean, they're going to have to pick and stick with a province like Ontario that is the number one customer, but also has the access to the raw materials they need. And high-grade nickel is an ingredient of their industrial and particularly military expansion. And they know this. And the Department of Defense is in Ontario's north. They're looking for opportunities for partnership. They've taken some equity. They sometimes have taken offtake. But the bottom line is this is another opportunity where we want to flex our muscle to the U.S. or to other like-minded nations to say security of supply, ethical access. And keep in mind, when it comes to moving the ore, the Great Lakes is one advantage. But we're also looking at a net new port in the James Bay, which may not be essential for your project per se, but for other projects, it can really play a role in getting the commodity to new markets.
But how willing are customers, to pay maybe a premium for? There's the high purity, but you could also market it as green nickel as well. Do you think there's a market for that to differentiate maybe the low cost, dirty so-called Indonesian nickel and the high purity green Western?
Yeah, there's basically sort of 2 points on that. One, in the US right now, the premium for nickel is almost $1 a pound. And that is driven by, it's not strictly a green nickel premium, but it's a combination of clean, local, and the right product in the right form. So there already is that emerging, and that's why we want to build a downstream plant to capture that premium that's available in the market. Number two is in Europe, there's what's called the CBAM, which is a carbon border adjustment mechanism. One of the sectors that's going to be applied to is steel, and because nickel is used in stainless steel, it'll be indirectly in there. So starting in a year's time, you will start to see a real premium emerge for green nickel, and we're quite fortunate to be able to be well positioned to take advantage of that.
Is one of the difficulties that there's not really a green standard that's been agreed on across jurisdictions?
Very much so, yeah.
Well, I was going to add, Colin, that this is an issue that isn't just nickel. The reality is China has, or today dominates, the production of virtually all metals. Today, just because of that, like virtually every metal is deemed critical because China dominates production. And critical minerals in North America means stuff that isn't being produced by China. So it's pretty much everything. And some of these are things like nickel that are used in batteries, and things like aluminum and manganese and magnesium and stuff you've never even heard of, like half the periodic table. It's all produced in China. And why is that? Because China had the cheapest labor costs. It had the cheapest electricity costs because it was burning very, very cheap coal forever. And it just had this government desire to industrialize like crazy. And the Chinese went off and built smelters everywhere. Just unbelievable numbers. I mean, you talk about the aluminum industry being stressed, it was because of Chinese smelters. So it's a real question I have, how this notion of critical minerals, really it should be critical metals, because there's no great shortage of minerals in the world. It's metals or metal production in North America or Europe. That's the scarce thing, because all this stuff's in China right now. 60% of copper, 70% of most metals, 80% of lithium, 90% of cobalt. You can just go right down the list. It's all dominated by Chinese production. So, and they're still the cheapest. If you want to buy a couple of tons of copper in Mexico, you buy it in China because it's way cheaper than buying it from Ontario or nickel. So is there going to be a kind of a green premium, if we want to call it green, or clean or North American production, or some sort of a premium for what we produce today? I don't know. I don't know. I mean, there almost has to be, because how are our smelters and refiners going to beat China on cost? So if they can't beat China on cost, how are they going to be profitable if they're trying to compete with China? It's a real tough issue without a pile of government support, which, quite frankly, is usually not very sustainable. Governments today are great. They're supportive and wonderful, and thank you. But tomorrow, the people may vote a very different type of government. They may not be so supportive. So I don't know. It's an issue that I think of all the time for nickel, for copper, for just about everything that currently we're trying to produce because China produces the dominant, and we're trying to sort of beat them at that game. It's a big problem, I think.
But Minister Lecce, you maybe have an answer on that, the $500 million critical minerals processing fund, how sustainable is that to keep going? You want to mandate it so that it's sticking over?
I mean, the message resonates with me. I mean, it could help enable, it could help make the economics in the short term. But I think what we need is long-term government policy and regulatory certainty that really could de-risk these investments. Low-cost electricity, provinces and federal government investing in enabling infrastructure, in roads, work to support equity participation, and really the loan guarantees for Indigenous. Right. I think this is how we make the projects more competitive and thus more economical. But fundamentally, I think the G7 and I think allied industrialized economies are going to have a serious discussion about this principle of, is it offtake agreements from within, and the sort of the coalition of the willing. There's been other concepts of, have establishing some sort of commodity floor price. I'm not here to advance a policy. I'm here to simply say I'm here to listen to your advice. But bottom line is the status quo should not prevail, because otherwise market manipulations and the use of state-owned enterprises and state levers by the Chinese, no one can compete. And I'm not sure we want to compete on that playing field. I think we want to elevate ourselves in consciousness around the things and the values that I think make our countries strong and unique.
Right. Mark.
Yeah, I mean, the good thing is those premiums are there already, and hopefully will get wider. The problem is we as a country have forgotten about processing. The last processing plants we built were in the 1970s, other than Voisey's Bay, which was, basically Newfoundland holding Inco hostage. And so we need, that extra government money to help kickstart the process, so we can start getting going again. Because literally, some of the advisors we're using to help get these projects are 80 plus years old, because they're the last guys who've built plants in this part of the world to get going. And it's very good to hear these comments, here, and the change in sentiment, because I can tell you, the single biggest pushback that I have had on my project for the last 5 years is, why are you building downstream processing? Why are you going to spend an extra couple $2 billion to get those plants in place? But it's for exactly those reasons that we need to do it. And again, once we have processing plants in place, we unlock more mine production, because we'll have cheaper, newer processing plants than the 100-year-old flow sheets that we have to deal with in Sudbury today. And once you build one step of downstream, then that creates the opportunity to build the next step in place, right? And again, we haven't had those multiple step value chains in place in this country for a very long time. But once we get the ball rolling, again, with the foundation that Ontario's I'm looking forward to a pretty exciting
So that's
10,
kind
20
of
years.
a vision there, 10, 20 years. And I want to kind of just bring in the minister again to talk about Ring of Fire, because that's kind of a vision of 10 or so years. It gets a lot of promo, a lot of hype. It's in all the advertising. We're watching the World Series. We saw it every inning. Ring of Fire.
Did you also see the Ronald Reagan ad? That one got a little bit more attention than the Ring of Fire ad, but I know the truth hurts to my American friends.
It's good morning in Ontario.
It's a good morning in Ontario, the shiny city on the hill, you know. But yes.
Ring of Fire. I mean, you just there's some money just apportioned for some roads there. You've got some agreements with some First Nations communities. Things are ticking along. Can you give us a bit of a timeline and a sense of what's going on?
Sure.
There?
Look, I think things are moving at a pace we've not seen in the world. When it comes to the Ring of Fire, there's been decades. I recall when I worked for the former Prime Minister, and this was a concept that was socialized 25 years ago. We are going to get the road commenced in year 2026. So that's been, as a first principle, no government could even quantify or give certainty on when we're going to get the infrastructure. We are going to get the road authorized and start construction in 2026.
You've heard it here.
Well, you heard it from the Premier, so it must be true.
Yeah.
But we're going to unlock this. So last week, the Premier stood with chiefs. I thought it was a very powerful event. I don't expect you all to watch it, but just the symmetry, the alignment, the aspiration for better. And for the First Nations, it's really down to quality of life, but it's an intergenerational play. I mean, they see this as a way to give their kids hope. Right now, there's not much of that in some of these very remote and often fly-in communities. So it's honorable for the basis of changing the lives of those people that live there, that have lived there for millennia. It's also very honorable because it's going to help get these resources and create jobs and tens of billions of GDP gain to the national economy when we're in a very real protracted economic war with the US. So certainty on the roads. We're building community infrastructure. Part of this is just the realization that, they want community centers. They want, social infrastructure. So the province has stepped up with a lot of investment in a series of communities in the north. They want transmission. They want to displace diesel. They want the basics that we have that maybe we take for granted in the south. They want to turn on power and make sure it's reliable and affordable. And so we're building transmission in 50-50 equity partnership, the most progressive equity participation of any jurisdiction in the country. We've done this for years. Every transmission line I've authorized and designated has been a 50-50 with local Indigenous participation. So you're going to see the roads commence. You're going to see some of the large investors and some of the permit holders in the region announce programs and plans to really get things moving, which is powerful. You're seeing an expansion of investment on some of the housing and some of the enabling investments that you all will need to make these communities viable and less fly-in and more sort of permanent. I think the bottom line is there's collaboration and there's a spirit of commitment to work together. And I think we've come a long way from when we introduced Bill 5. I mean, look, change is necessary. It's not always easy. When the status quo has prevailed for a long, long time, the idea of imposing deadlines not on the First Nation, and certainly not on your responsibility to consult with them, but on government alone, it still gave a bit of a concern to some. And we, I think, have been able to demonstrate you can cut permit timelines by half while still fulfilling your constitutional obligations with respect to the duty to consult.
Thank you, Minister. Ross, you've built Greenstone up in the far north as well, and you must have had experiences there with the development and the Indigenous community.
Yeah, I mean, we've had lots of good cooperation from the local communities. We have 5 impact benefit agreements with different First Nations right around the mine. And, it's been good. I have to say, I don't take credit for that. We bought a company that had done all that work. And once it was all done, we acquired the company and then we just built the mine. But it's worked well. And as I said, I have absolutely no complaints about working in Ontario at all. It's been a great place to work. And, the more you talk, the more I'm excited because we also have a property at Red Lake. Maybe we will build something up there. I'm going to dust off those old files,
It's a gold mine?
Yeah, it's a gold mine, yeah. It's, it might be a gold mine.
Might be a gold mine.
Thank you very much, Minister. Stephen Lecce, Minister of Energy and Mines in Ontario. Thanks very much for your boosting words today. Ross Beaty and Mark Selby with your great project near Timmins, the Crawford Nickel Project. Thank you to the Ontario panel.
thank you once again to Southern Cross Gold for sponsoring this week's episode of the Northern Miner Podcast. If you want to learn more, visit southerncrossgold.com. And thank you to the Unlocking Ontario panel for providing us with such a rich discussion. As a member of the audience there, it was exciting to watch. And thank you, dear listener, for continuing to support this program. If you want to help out the podcast, please leave us a review in the Apple Podcast directory. Share it with your friends. And until next week, take care.